Here's your second quarter 2023 real estate market update for Jacksonville, Florida. Let's start with some breaking news. Builders are now officially bullish. Yes, the National Association of Home Builders Confidence Index jumped 5 points to 55. Anything above 50 means that builder sentiment is bullish and things are expected to improve. The last time builders were bullish was July 2022. Hi, I'm Lucian Valancourt, real estate broker and owner of Native Sun Realty here in Jacksonville, Florida. It's been 6 months since my last real estate market update, so I thought that midway through the year was a good time to dive in, starting with the good news on the Home Builder Confidence Index. By the way, if you want to see more videos about Jacksonville and all kinds of other real estate related topics, then you should subscribe and click the notification bell so you won't miss any future videos. So what happened? Why all the hoopla? Well, after seeing the housing starts for May, it's easy to understand the builders' exuberance. Housing starts jumped 22% month over month to 1.63 million annualized. That's the highest figure since April of 2022. The construction industry is on pace to complete more than 1.5 million homes this year, which, according to the Census Bureau, would be the highest total since 2007. So why are builders getting so bowled up again? Well, number one, because overall demand is strong. Not 2021 strong, but still impressive. In fact, the second quarter of 2023 has shown consistent growth in demand for the last 3 months. Number two, because the low inventory of existing homes for sale is pushing buyers towards new homes. Builders are capitalizing on the fact that homeowners are just not selling. And three, because the price of some key building materials like lumber has come down by 70%. With this in mind, it's no surprise that the share prices of big builders like D.R. Horton, Pulte, Lennar, and Toll Brothers are all at record highs. The share prices of the big brokers, meanwhile, are not. Existing home sales in the Jacksonville metropolitan area for May were basically flat month over month, with 2,125 homes sold. This isn't terrible news, though, considering that the 30-year mortgage rates moved from near 6% in February to over 7% during April and May, and that inventory is so low. With only 2.2 months of inventory, the number of sales is expected to be low. You can't buy what's not for sale. Look a bit deeper, and what you see is a residential real estate market that is hot. Median days on the market fell to 33 in May. There was an average of 3.3 offers per home sold, and 16% of homes sold above their list price. The not-so-good news is that the average 30-year mortgage rate stayed near 7%. While I would have hoped for a decrease based on the Fed's pause and much lower consumer and producer price indexes, the recent hawkish Fed commentary and some high inflation figures in Europe kept rates high. Some good news for renters, though. Jacksonville rent growth slowed to 0.1% in May. In other words, we're back to normal. Last May, rent was growing at 0.6%. Home prices are moving on up. That's good news for sellers. They may be still down 1.39% year over year, but they're increasing month over month. This isn't just my opinion. As you can see, this chart shows a 3-month trend of increasing prices. And keep in mind that even a 1% month-over-month growth is significant. That's a 12% growth on an annualized basis. That said, the median sale price in Jacksonville rose to 3.1% from April to May. You may have heard that homeowners are locked in and not selling. Well, here's what locked in looks like. We all know that millions of Americans got new loans or refinanced old ones at very low rates during the pandemic. Recent data from Redfin makes it very clear why so many would-be sellers are staying put. Ponder this. 60% of mortgage holders have been in their homes 4 years or less. Considering that the average tenure of homeowners is 13 years, it's easy to see that people have just not owned their homes long enough to be in a position where they want or need to sell. And then there's this whole interest rate issue. People with lower rates understandably want to keep them. Here are some stats for you. 91.8% of mortgage holders have rates below 6%. 82.4% have rates below 5%. 62% have rates below 4%. And 23.5% have rates below 3%. But hey, life goes on. Sometimes people gotta move due to things like marriage, jobs, kids, or divorce. As we saw earlier this year, whenever 30-year mortgage rates approach 6%, we get a massive demand boost like we saw in February. I would say that indicates pent-up demand. People are ready to pounce as soon as rates nudge lower. What about the mortgage market? Are rates expected to improve? Things seem to be moving in the right direction for mortgage-backed securities last week. That is, until Thursday, when they jumped higher. It's impossible to know exactly what drove bond yields higher, but it seemed to be a combination of economic data and comments from the Fed. These comments from Jerome Powell seem to reinforce a consensus for more rate hikes in the future, or at least no rate cuts anytime soon.
Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
That statement sent a message to investors that the fight against inflation is not over. Interest rates move in tandem with inflation, so I'm not expecting any significant movement in rates. Also, the Bank of England surprised the market by hiking rates 50 basis points in response to their inflation running at a 3-decade high. Now, in case you're wondering what England has to do with U.S. mortgage rates, remember, bond markets are international. When the Bank of England raises rates, its bonds can become more attractive to investors. If investors sell U.S. securities to buy U.K. bonds, that pushes U.S. yields up and mortgage rates higher. The next Fed meeting is on July 26th. Based on the Fed funds rate futures, the market is currently pricing in a 74% chance of another 25 basis points hike, which would bring the Fed rate to 5.5%. Based on this, I would expect rates to hover around the 7% mark into the near future. The bottom line is that the Jacksonville and Northeast Florida real estate market is hot and remains a strong seller's market. Inventory remains low and home values are on the rise. Yes, mortgage rates could still rise, but the influx of people moving to Florida will keep demand for housing strong. Now, if you enjoyed this video and want to see more, make sure that you hit that subscribe button, and I'll see you on the next one. Till then, this is Lucian Valancourt with Native Sun Realty, helping you find your place in the sun.